The Originator Connect Network, the nation's largest producer of mortgage events, is about fostering a community founded on professionalism, collaboration, and personal and professional growth, connecting you to the story of your success. Find an event near you at originatorconnectnetwork.com.
Welcome to The Interest. I'm Mike Savino. We've been talking a lot about the need to show your value to your customers as a way to set yourself apart in a market where everyone is hunting for the lowest rate. Well, one way to do that is helping your customers find the loan that's right for them. You also need to help them understand what they can actually afford. Our own Katie Jensen has more in the latest installment of Ask an Expert.
We are a critical part of the economy. We provide a critical service. So take a little bit of a deep breath.
Things might be tough right now. Buyers are waiting for affordability to improve and originations are dropping. But Larry Baer of Market Alert reminds us that home buying will continue.
The borrowers are still looking for buying that home. The mortgage loan officers will still serve a critical process, a part of that process.
But how do you find loans to close right now? Of course, you can help borrowers time the market to get the best rate and understand the value of home ownership when the opportunity comes.
There are few investment vehicles, believe it or not, that over a period of time perform as well as an investment in single-family housing.
You can also help find the right loan for your customers. You don't need to be a specialist in every type of loan. Just know the surrounding community and which loans serve the needs of most of your customers.
I mean, it is just absolutely impossible to sell apples out of an empty cart.
Baer also suggests finding lead sources that bring your customers to you before they talk to realtors. Then you can set realistic expectations before borrowers fall in love with homes they can't afford.
If I had a magic wand, then that's where I would wave it, and that's the way I would convert that process.
Lastly, be honest with your customers. Tell them why a specific loan is bad for them, even if it seems attractive in the long run. And don't beat yourself up when the math doesn't add up and customers can't purchase the home they think they can afford.
No matter how many iterations of different loan programs and buy downs and buy ups and adjustable rate we come to, it's still going to be a number. And that number is going to say, this is it. This is the max we can get you to.
To hear more from Baer, listen to The Principal, the Mortgage News Network's daily podcast, available wherever you get your podcasts. For the Mortgage News Network, I'm Katie Jensen.
Thanks, Katie. And you need to guide your borrowers because they're not likely to get relief on prices, at least not according to the National Association of Realtors. Chief Economist Lawrence Yoon says that prices won't fall as long as the rate for the 30-year fixed stays at around 7%. In fact, he thinks it's sales that will be the thing that falls, dropping by 7%. Meanwhile, prices will trickle up by another 1%. Speaking at NAR's conference this weekend, you noted the wide gap between current mortgage rates and the federal funds rate. He says that the normal spread would put the 30-year fix at 5.8%. So if inflation cools and confidence returns in the economy, rates should fall back down, giving homeowners who are buying right now the chance to refinance. Coming up, Movement Mortgage makes a big move.
Don't miss the largest regional mortgage show in the nation. The New England Mortgage Expo returns to Mohegan Sun in Connecticut, January 12th and 13th. See us at www.nemortgageexpo.com. Start your year with the best connections in the industry. Dozens of sessions, scores of exhibitors. It's where success is written every hour. www.nemortgageexpo.com.
Welcome back. One of the nation's biggest retail lenders is making a big move to expand its footprint on the East Coast. Movement Mortgage, the sixth largest retailer in the country, is buying Mortgage Network. The two companies did not share the terms of the deal. South Carolina-based Movement says that the deal will add 250 employees at 31 locations, producing another $2 billion in volume. Mortgage Network is based in Massachusetts. Founded in 1988, Mortgage Network had become one of the biggest privately held independent mortgage companies in the eastern United States, with locations in 27 states. Movement Mortgage was founded during the 2008 financial crisis and has $30 billion in residential mortgages annually. And finally, do you know a woman helping to advance tech in the mortgage industry? then please let us know. We're seeking nominees for our Women of Tech Awards. These are women who are bringing the industry into the modern age, especially those who are pioneering and mentoring the next generation in their tech careers. Honorees will be recognized in a future edition of Mortgage Women magazine and on this show. The deadline to nominate is Friday. Self-nominations are welcome. Just go to nmplink.com/women of tech. We'll be right back with what else is interesting today.
The Originator Connect Network, connecting you to the story of your success. Find an event near you at originatorconnectnetwork.com.
Welcome back. Here's what else is interesting today. We talked earlier about the importance of guiding your customers into the right loan. Well, it seems more borrowers are opting for adjustable rate mortgages, banking on the opportunity to refinance once rates drop back down. According to Black Knight, ARMs accounted for just over 13% of all rate locks in October. That's up nearly 2 points from September. For more on these and all of today's top stories, go to mortgagenewsnetwork.com.